Cycle is in progress. Because of the Fed's dovish stance, risky assets should benefit from monetary liquidity. Additionally, we believe that the Fed wants CEO confidence to rebound, which we would gauge by the ISM rising back above 50 as it would increase employment. In addition to decreasing the advantage of cash ownership, the spread of mortgages to 10 years should decrease, which should improve housing. The yield is decreasing, which will cause cash to leave the sidelines and increase risk. To put it simply, I believe that the three areas that should be prioritized are interest rate-sensitive sectors, including small caps and financials, crypto, which includes Bitcoin and Ethereum, and Mag 7 and AI equities. However, I would say that historically, monetary liquidity and the fact that cash is leaving the sidelines tend to have the first, more significant consequences. Crypto tend to have the first, more significant consequences. Crypto has taken the lead since the Fed announced its cuts. Bitcoin and Ethereum. That is a lot like what happened in 2024 when the Fed made a decrease in September following a long hiatus. One thing that Tom Lee overlooks, and I will remind everyone of, is that when the Fed lowered interest rates last September, XRP blew up much more than Bitcoin and Ethereum combined. I don't think it will be any different this time around because XRP is well positioned to dominate the market. They are forming alliances with BlackRock. Among many other things, they are launching a ton of ETFs. I'm getting off topic though. In today's video, Tom Lee discusses a number of crucial topics that you should be aware of. Please pay strict attention. It will transform your life. Now let's watch the video. Since the Fed easing cycle is underway, we will begin this video with discussing the macro. On Wednesday, the Fed announced a 25 basis point decrease. Additionally, I thought it was dovish because the Fed stated that the inflationary pressures from tariffs were less than they had anticipated, in addition to acknowledging that future cuts are coming, which is an easing cycle. Once more, we are in the camp of temporary inflation. At Fundstrat, we held a position on this and anticipated a post-Fed surge in stocks. And we saw that, in fact, there was strong follow-through in both the Nasdaq and small caps, which beat the small caps. In the 24 hours following the Fed's announcement of this decrease, the Nasdaq was up 1% and small caps were up 2.5%. You may be wondering if stocks will keep rising, and we believe that they will. According to the statistics I'm quoting from Ryan Detrick of Carson Group, the S&Ps rise 20 times with an average gain of about 14% when the Fed cuts within 2% of all-time highs. You're probably wondering what will do better after the Fed. All we aim to do is provide you with a basic framework. Because of the Fed's dovish stance, risky assets should benefit from monetary liquidity. Additionally, since it will increase employment, we believe the Fed wants CEO confidence to rebound, which we would gauge by the ISM rising back above 50. There should be a decrease in the mortgage spread to 10 years, which will increase housing. Additionally, he is less years, which will increase housing. Additionally, he is lessening the advantages of having riches. The yield is decreasing, and that's risky and will force money off the sidelines. Simply put, I believe that the three areas that should be prioritized are interest rate-sensitive sectors, including small caps and financials, crypto, which includes small caps and financials, crypto, which includes Bitcoin and Ethereum, and Mag 7 and AI stocks. However, I would add that historically, monetary liquidity and the fact that cash is leaving the sidelines tend to be the first, more significant effects. Bitcoin and Ethereum have taken the lead in the cryptocurrency space. That's a lot like what happened in 2024 when the Fed made a decrease in September following a long hiatus. The equities that have the most correlation with Ethereum and Bitcoin are MicroStrategy, ticker MSTR, which saw a 6% boost. Bitmine, which has the most Ethereum globally and had a 5% increase, is the most leveraged stock on Thursday. Since the Fed is lowering its all-time highs, many of you may believe that markets are in a bubble. However, as we have shown, this has happened numerous times, and stock has increased 20 out of 20 times since. However, I believe the best method to approach it is to consider Nvidia, which is a granny shop, but as you can see, its PE is 26.6 times. Do I now consider that to be costly? I don't. To begin with, this chart shows that it is in the middle of its range for the past 5 years. However, bear in mind that Walmart and Costco trade at 34 and 48 times profits, respectively. Compared to Nvidia, these are much less rare and distinctive. Because they provide a semiconductor that every AI business needs, Nvidia is currently the most scarce corporation in the world. Thus, I don't believe Nvidia is in a bubble until it trades at the same multiple as Costco. As of September 1998, Cisco's stock was trading at $16.55 times earnings. For what reason am I using September 1998? That's comparable to 2025 then. After a protracted wait, the Fed made a cut in September. Over the next 12 months, Nvidia's PE increased 210 times and its share price dropped to $80. As a result, the PE increased 4x and its stock increased 5x. I refer to that as a bubble. With Nvidia now at 26 times forward earnings, we're not quite there yet. Pay more attention to sentiment. AAII's net bulls to bears ratio remains negative. At an all-time high, there are more bears than bulls. In actuality, markets have reached an all-time high for the past 7 weeks, but sentiment is still negative. If investors are pessimistic about the highs, it is impossible to claim that we are at the top. Let's now discuss the performance of granny stocks. Over the last week, Oracle, Tesla, Vistra, Lam Research, and Palantir have been the top 5 performers. Now, they're all about AI, but Oracle naturally soared on strong profits, and Tesla gained because Elon Musk made a $1 billion insider purchase. Netflix, Cadence Design Systems, Amazon, Robinhood Markets, and Garmin were the 5 poorest performers. Profit-taking accounts for a portion of this, particularly for stocks like Cadence. Additionally, in terms of themes, cybersecurity and energy performed the best, led by GE Vernova, Palantir, Vistra, and labor shortage, which is a study conducted by Oracle, Tesla, and Lam. Study conducted by Oracle, Tesla, and Lam. Seasonality was also effective. Once more, Oracle and Palantir were identified as seeds in every deal. Both Oracle and Palantir, however, have long been granny shots. You should all be aware at this point that the blockchain industry's AI race is a major concern. And for that reason, you should pay great attention to what I have to say. I compare everything that is happening with the Tensor to what I was observing with Bitcoin in 2012. I do this every day. Today, I'm seeing with the Tensor, with a focus on B-Tensor, which billionaire Barry Silbert compares to Bitcoin back in 2013 when its price was less than $500 per coin. Today's video is sponsored by Next-Gen Digital Platforms, US symbol NNXTDF, which recently went public with a 4-sectoral business model named AI, Decentralization, and Compute. A variety of interactive brokers such as Fidelity offer the stock. In addition to adding Bitcoin, Ethereum, and Tau to its balance sheet, it will also issue debentures to entice family offices and money managers who now own these assets to accept shares in NXTDF in return for Bitcoin, and Tau. NXTDF in return for Bitcoin, ETH, and Tau. These companies include Schwab, E-Trade, and numerous more. Second, Next-Gen Digital Platforms wants to start mining as well. The company is investigating ways to validate, stake, and invest in the B-Tensor network, whether it's by investing in the subnets or donating compute. If this sounds intriguing to you, I've included a link below so you can check it out and discover what it's all about. This is being brought up by a variety of people, and they have significant advancements planned. Click the link below. Let's return to the video now. The industry is receiving new funding from a variety of other digital asset treasury vehicles, acquiring Bitcoin and other spot cryptocurrency commodities. Therefore, in my view, that will be combined with only the macro environment, whether it's labor markets, inflation, etc. I believe the labor markets, inflation, etc. I believe that all of the price motion is being driven by that kind of sentiment risk. There isn't any peculiarity specific to cryptocurrency that is actually encouraging a massive run. At the same time, I believe that this is the reason why we aren't observing any systemic concerns or areas of worry that would lead me to believe that we are entering a bubble and that it will burst for a specific reason.